In 2016 and again in 2017, a man who claims to be worth billions of dollars paid exactly $750 in federal income taxes. 750. Let's put that number into perspective. The average American household pays about $15,000 a year to the IRS. A manager at McDonald's pays more tax. A school teacher pays more tax. Even a teenager working part-time at a grocery store contributes more to the federal government than a real estate tycoon with his name on skyscrapers. When the news leaked, the media called it a scandal. They called it fraud. They called it evasion. But they were wrong. It wasn't a crime. It was a calculator. You see, in America, there are two sets of laws. There is one set for the people who work for money, and there is a completely different set for the people who own assets. Donald Trump didn't dodge his taxes. He simply used a specific series of lines in the IRS code, lines that were written specifically to help real estate developers pay zero. Today, we are going to open the books. We are going to break down the exact mathematical formula the rich use to wipe out their tax bills legally. This isn't politics. This is the difference between being a W-2 employee and being a tycoon. To understand the loophole, you have to understand the trap you are currently in. If you have a job, you are a W-2 earner. You are the favorite victim of the IRS because the government takes your money before you even touch it. You earn $1, the government takes 30 cents, and you try to live on the 70 cents left over. You have zero control. But real estate is different. The U.S. government loves real estate. They need people to build housing, offices, and hotels, so they created a series of incentives, bribes really, to encourage developers to build. They said, if you buy property, we will let you write off almost everything. This brings us to the first pillar of the strategy, the phantom loss. In the real world, a building usually goes up in value over time. If you bought a tower in Manhattan in 1980, it is worth 10 times more today. That is reality. But in the tax world, the fantasy world of the IRS, buildings are assumed to be falling apart. The government allows a real estate owner to tell the IRS, my building is getting older, it is losing value, so I'm going to deduct that loss from my income. It's called depreciation. You didn't actually lose money. You didn't write a check. But on your tax return, you get to tell the government you lost millions. So Trump earns $10 million in rent, but he tells the IRS his building's depreciated by $10 million. Result? He made $10 million in cash, but he reports $0 in profit. But wait, it gets deeper, much deeper. What happens if your paper losses are bigger than your income? This is the specific secret that allowed Donald Trump to go nearly 2 decades without paying a dime. We have to go back to 1995. In 1995, Trump filed a tax return showing a loss of nearly $1 billion, specifically $916 million. Now, in the business world, losing $1 billion is a disaster. But in the tax world, it is a golden ticket. The IRS has a rule called net operating loss carryforward. It means if you lose money this year, you can use that loss to wipe out your taxes in future years. It is like a coupon that never expires. Because Trump reported a $916 million loss in 1995, the IRS allowed him to use that loss to cancel out his income for the next 18 years. Think about that. He could earn $50 million a year in pure profit and simply tell the IRS, sorry, I'm still paying off that loss from 1995. It was a tax shield that lasted almost 2 decades. And the best part, it was perfectly legal. But eventually, the loss runs out. Eventually, you have to make money, right? Not if you understand the second pillar. Debt is tax-free. This is the concept that confuses the average person. We are taught that debt is bad. We are taught to pay off our mortgage. But to a billionaire, debt is not a burden. It is a product. Here is the math. Imagine you buy a hotel for $100 million. Over 10 years, the value goes up to $200 million. If you sell it, you have to pay taxes on that $100 million profit. The IRS takes 20 to 40%. So the tycoon doesn't sell. Instead, he walks into a bank and says, my hotel is worth $200 million. I want to refinance. The bank gives him a loan for $150 million. He pays off the old mortgage, and now he has $50 million in cold hard cash sitting in his pocket. Now here is the $1 million question. Do you pay taxes on a loan? The answer is no. The IRS does not count borrowed money as income. It is a liability. So Trump can pull out $50 million, buy a jet, buy a yacht, or simply live a lavish lifestyle and pay zero tax on that money because technically he owes it back. In fact, it gets even better. The interest he pays on that loan, that is a business expense. So not only is the cash tax-free, but the cost of the cash helps him lower his taxes even further. It is a perfect circle. He uses debt to avoid taxes, and he uses the tax savings to buy more real estate. But there is a catch, a massive, dangerous catch. Eventually, the bill comes due. Eventually, you have to sell the property, and when you sell, all those years of phantom losses and refinance debt come back to haunt you. The IRS waits at the exit door with a massive bill, ready to take 40% of everything you made. This is called recapture, and it destroys wealth. Unless you know the 1031 secret. Most people think you have to pay taxes when you sell, but there is one loophole in the code that allows you to sell a billion-dollar property and pay absolutely nothing. It is called the Section 1031 like-kind exchange. This law was originally written for farmers in the 1920s who wanted to swap cows. But today, it is used to swap skyscrapers. Here is how it works. If you sell a building for a profit, the IRS demands their cut, unless you take every single penny of that profit and immediately dump it into a new, more expensive building. If you do that, the IRS agrees to look the other way. They let you defer the taxes. You kick the can down the road. So Trump buys a building for $10 million, sells it for $20 million. Does he pay tax on the $10 million profit? No. He rolls it into a $50 million skyscraper. 5 years later, he sells that for $100 million. Does he pay tax? No. He rolls it into a golf course. It is called swap till you drop. You can do this forever. You can trade up and up, accumulating billions in assets, generating millions in cash flow. And as long as you never cash out to a savings account, the IRS gets nothing. But critics will say you have to pay eventually. You can't defer it, but death is the final deadline. Actually, it's not. This is the final, most controversial loophole of them all. It is called the step-up in basis. When you die, the government has to decide what your assets are worth so your heirs can inherit them. Logic would say your heirs should inherit your tax bill, right? If you defer taxes for 50 years, your children should have to pay them. But that's not how it works. Under current U.S. law, when you die, the value of your property is stepped up to the current market price. The history is wiped clean. All those taxes you deferred from 1980, 1990, and 2000, they vanish. Your heirs inherit the property as if you just bought it yesterday. This is how dynasties are built. One generation builds the wealth using debt and depreciation. They avoid taxes for a lifetime using 1031 exchanges. And then they die, and the tax bill dies with them. The next generation starts fresh with billions in assets and zero debt to the IRS. This is why the tax the rich arguments often fail. You can raise the income tax rate to 90%, and it won't matter to a man like Donald Trump because he doesn't have income. He has debt, depreciation, and exchanges. The system wasn't broken by accident. It was designed this way. The tax code is 7,000 pages long. The first page says how much you have to pay. The other 6,999 pages explain how not to pay. The rich hire people to read the other pages. You can be angry about it. You can scream at the TV, or you can learn the rules. The era of the pension is over. The era of the salary is ending. We are entering the era of the asset owner. If you rely on a paycheck, you will always be the victim of the tax code. But if you learn to acquire assets, utilize debt, and understand the law, you can stop playing the game on hard mode. If you want to learn how to protect your wealth in a rigged system, you need to see the patterns before they happen. Subscribe to Wealth Archive. We don't just tell you the history, we show you the receipt.